Hi, everyone. This doesn't happen every day, maybe 3, 4 times a year. I get a chance to sit down with my guru, warrior brother, David Hunter. David, great to have you back. Nice to see you. Um, is that an okay description for you? A guru, warrior
No,
brother?
yeah, some people call me a guru, some people call me an idiot, so you can choose.
All right, I didn't. I wasn't sure you'd go for guru because people have images of you sitting under a pyramid with a tinfoil hat, projecting your trends and your objectives in the market. But
Isn't that what I do?
yeah, that we do it, but not in that way. And I was thinking about you all the way up. You know, I even turned a little bearish at 340, and I'm playing the correction now. But you know what I was thinking when we were up here, and it'd be interesting to know what you were thinking, is that I know you don't like to have a lot of company, therefore your handle. And when we were at 4,600, it looked like just a layup to get to new highs. And it was no longer a contrarian position. It became a consensus, and more people that hated you down here calling for the melt up and capitulation by all kinds of bears on Wall Street. How are you feeling? And how are you feeling now? I think you told me before we came on the air that you have a lot more company now at 4,500, 4,400 uh, than you did down here when you really had to have conviction to stay with the trade.
Yeah, for sure. I mean, everybody hated the market at 3,500, and even at 4,000,
Yeah.
it was in most people's mind just a matter of which day are we going to get out because this thing's going to roll over. So you got above 4,300, and that 300 point run to 4,600 brought in a lot of the bears back to the bull side.
Yeah.
But and at 4,600, I pretty much had said, even when we were down in the low 4,000s, I said I see a setup where we could run 4,600 and then have a 10% pullback. And so at 4,600, 4,650, I thought we'd probably see something. As we got there, I said, I'm not so sure it's a 10% pullback, but I think we'll get, 5% maybe, or a little more. And that's
Okay.
what we got, obviously back a few weeks ago. And what I have said is that even though a lot of people moved away from their bear position, they had very little conviction on the bull side. They were basically caught up in the tape. Was as long as we have the momentum, I'm bullish. But as soon as you lost that momentum, you saw the sentiment turn very quickly. So I'm pretty comfortable that what we're seeing here is the pause that refreshes. And
Okay.
so, as I say, it's rebuilt the wall of worry. I think there are obviously some people throwing around melt up and things like that now that weren't before. But by and large, I think what we're seeing is there's not a lot of conviction on the bullish side, and there's still plenty of people worried about the imbalances that are out there, the excesses that are out there, and rightfully so. There are an awful lot of them. So I'm comfortable, and actually think we may be. We always seem to find a good day to talk, because and even though we've kind of set these appointments, well in advance, it always seems to come on a good day. And I actually think today may be a very important reversal day, or close to an important reversal day if it's not today. So, and
Okay.
that I'm talking about so many things. The
Are
stock
you
market.
are would you be would you be open to this correction continuing to unfold back to the battleground of 4,200?
Absolutely. I don't think that's the most likely scenario, but I said yesterday and got people nervous. I said, there is a head and shoulder setup here that could take you back to 4,200.
Yeah.
I don't think that's most likely. I think most likely is we're going to stop here above 4,400, maybe right here where we got to this morning,
Okay.
and reverse ourselves here. We'll see. I mean,
Okay.
we'll know pretty quickly.
Okay, because you would need that reversal now to fulfill I believe a few months ago, and things are fluid, you were thinking 6K by October. Do we have to push that out?
Yeah, probably. I mean, that's insane if we do it in that time. So
Is it the
as I,
spring?
no, I don't think so. I mean, it's certainly possible. It takes, it's been stretched out all through this. So it's certainly possible, but I think you can still make the case because I believe it's going to be a very steep parabolic run to the top. You can make the case it happens in the next 2 or 3 months.
Okay.
So it can still happen before the end of the year. I certainly think a lot of it will happen before the end of the year. Whether it pushes into next year or not, I have no idea. As I have said on Twitter many times, the market doesn't care about calendars. We all talk about year end, and it's like there's some wall there that if it's going to be after the first, it's something after the 31st, it's something else. I think it can happen this year. Do I
Okay.
know that? No, obviously not.
Okay. All right. So I want, you talk about other sectors besides the S&P. So I'm interested in whether or not you were surprised, and it's almost a testament to the market how well it's held up with yields. I believe you probably thought yields would be much lower by now after this October high, and here we
Yes,
are
yes. I
pressing it.
I did not think we'd go back and retest the October highs in rates, and that's what we've done pretty much exactly. Um, and so, my guess was when we were back at 330 on the 10-year, I thought we'd see the gap filled in at 490 and at 390, and there was also another gap at 407.8. So I
Yeah.
thought that was possible. I didn't think we were going to go above 410, but it did. But it just looks to me like it's a double top in rates here. And my guess is we'll see. My call hasn't changed. I still think we'll see 250 on the 10-year, maybe before the end of the year, probably before the end of the year. But again, just like the stock market, I'm not
Yeah.
worried about whether it happens before the end of the year or after the end of the year.
Okay.
And then you probably back up rates again somewhat, fill in some of the run, and then head back down to much lower lows. I ultimately in the bust
Two.
that I'm still calling for, I'm looking for a 0% 10-year, probably a negative percent 10-year.
Okay. Interesting.
So
Okay.
I think I'm probably pretty alone out there in terms of saying we haven't seen the lows in interest rates for the cycle, that there's one more low. Whether it's 0 on the 10-year, a half on the 30-year, negative rates for sure on the short end. I don't think that 0.4% 30-year rate that we saw back in 2020 is the low. I think we're going to go below that.
Okay. Wow. So
And that's in the
that
bust. That's not now. That's
right, right. That's when the Fed is panicking.
yeah. When they're
Uh,
printing $20 trillion to cover a free falling financial system, you could see rates go right to the floor.
okay. All right. So TLT was your instrument of choice. And unlike the 10-year, David, we haven't made new lows yet. That's a caveat yet
Yep.
from this October low. But uh, then this must be setting up a pretty good buying opportunity if you still think we have 120 in
Yeah.
TLT.
I think TLT basically filled in a gap. Did a retest of its October lows, just like the market, just like the bond market, and I am still calling for 200 on TLT in the bust. So when we get that 0% 10-year, quarter or half 30-year, TLT is probably a $200 number. In the meantime, I think it can run to 120 probably in this run before the end of the year. So
Okay.
if you think about that, I mean, this is
That's a
a
big trade from here.
surrogate for the Treasury, and we're heading for, if I'm right about the bust, we're heading for the worst, economic and financial crisis we've had in the post World War
Ever.
II era.
Yeah.
And I'm saying this thing can double. I mean, more than double. I mean,
See, yeah.
that will be one of the few assets that I think will look pretty good in that period.
Okay, so that's why I call you the most bullish bear on the street, because you're already all right. You're already looking ahead after this melt up at what could happen. I'm going to get to a few I think are really going to be the culprits of it, but I also wanted to cover the strength in the dollar, which is not many people, and most people are still pretty bearish the dollar. Do you think it has much more left in it to the upside? Were you expecting 105?
I thought we could get up to, I don't know, somewhere between 103 and 104. So it's pushed above that, 200 day, I guess that is, right?
Yeah, the
Um,
200 week, actually,
or
it's a
200 week,
50
yeah.
week, 50 week
50
that
week, yeah. So
appears.
it pushed
Yeah,
above that, which you don't like to see, but I don't see anything here that tells me it's anything but a counter trend rally. I still believe we're going to 80 on the dollar.
okay.
And I think it's very close to the end. What you're seeing now is what you see always close to reversals, which is people are getting caught in this, particularly when it pushed above the 50 week there,
Yeah, they're
getting caught
squeezed.
in the momentum and starting to play leapfrog on targets. Okay, I think we're going to 108. Oh, we might be going to 110. So I
Yeah,
think we're really close to a major reversal. And my next stop would be 94, 95, ultimately on the way to 90. And then if I'm right, we break 90 and you run pretty quickly to 80.
okay. So big dollar bear still. So this could be an opportunity. Also wanted to ask you about another instrument that you favored in the precious metal arena, and that would be SILJ, which really is looks like it wants new lows here, unless this is going to reverse today too, David. Um, Pretty lackluster, and silver's performed. The physical metal has performed much better. I mean, you look at the difference between here's an SILJ weekly pressing the lows, although silver's come under some pressure in the last two, really mainly week from had a pretty good break. I'm looking for maybe here 20 and a half. You still like SILJ?
Yeah, I think there's a possibility. Obviously, I always beg off the day to day, and that I am not that
Yeah,
good at the very short term. But I think there's a real possibility that we're going to turn today. That we got down here to 22 and change, I guess. Um,
yes,
high 22s. I think we're very close on both the miners and the metals, and the dollar is the key. I mean,
it
lower
is.
rates will help, but absolutely, if I'm right on the dollar, I'm absolutely right on metals, and my call hasn't changed at all. I think
Yeah, isn't it?
SILJ can,
It's almost all one market, David, isn't it? When the dollar
it's
is
true.
good, you can't be long anything, and when the dollar's bad, you could buy the world.
Yeah, I mean that's why I'm a macro strategist. When you look, all these markets are right into a same fulcrum. It's like you're right, sitting right on. Either I'm going to be dead wrong or dead right, probably. But you're sitting on a turn in the dollar will make a difference for every other market, particularly the metals. Gold looks great. Gold gets beat up so much, and I go step back. Gold was 1060 a few years ago, and
Yeah,
it's now it's 1900 or almost 1950 on its way to new high. It's not that far off new highs, and yet all
yeah.
time highs. And yet you would think by the way the market looks at it that it's down at 1,000.
Well,
um,
one of my followers sent me something that the borrowing rate for shorting gold to hypothecate these trades had doubled.
really,
So it's become more and more expensive to short gold. So wherever the bottom comes in, David, I expect it to be a spike
yeah,
because
yeah.
there'll be some kind of massive short covering at the bottom, and
People
it'll
can't
get,
afford to hang on to their shorts. Yeah,
yeah. Okay. Also wanted to cover something that I'm sure you're probably a little disappointed. Maybe its time is coming, but I know you liked the Russell. And during this whole summer period, it did nothing, basically nothing. We're at some major support. think this is still a buy and it's going to
Yeah,
play catch up?
my whole thesis is that we're going to see the market broaden out a lot. And as you know, going into a top, normally you narrow into a top, right? And
Yeah,
it gets to be a handful of stocks that do it, and that's kind of what we saw early this year with the Magnificent Seven.
right.
However, I think that's a curveball because I think what you're going to see is the market broaden out. I still, my thesis really is saying investors are going to see the end of a tightening cycle. I think that's really the wind that's going to blow this thing to the highs. At the end of the tightening cycle, they're going to view this like they would. You're an old timer like me, so I'll use August of 1982. As
Okay.
much as we're not far off highs, they're going to view this as the beginning of a new cycle and broaden the market out. Cyclicals will play, small and large cap will
How
play.
about micro caps? That'll be a sign we're close when they
Yeah,
start buying penny stocks. Dave,
yeah,
what do you think?
I don't follow those, and I view that as a different story because, as you know, microcaps and penny stocks do come at an end because that's when speculation is at its
Yeah,
greatest. But if you go back to August of 1982 as a
I remember
analogy,
it. I remember it.
it's the beginning of a cycle. It's the beginning of the Fed starting to ease. It's the beginning of a new economic cycle. So you see everything play because growth is playing because rates are coming down, and
Yeah.
cyclicals are playing because people see next year as a better economy. That's what I expect the next few months to be. And the Russell will be a part of that. I think the Russell, my target is 3,000. I haven't wavered on that one bit.
Okay. A couple other sectors, and you talked about it, and I think it's going to be part of the bust. Where are you standing on financials now, David? They their charts look kind of ugly to me, especially, and tell me if you think this is really part of the bust scenario. Let's look at regional banks. They still look negative to me. So is the fact that we're having, I think, a banking crisis actually could be the fuel for a melt up as the Fed has to keep pumping liquidity to try and save the banks here because the regionals don't look good, and it's not just the regionals anymore. It's even things like JP Morgan starting to roll over and cities near COVID lows. The banking, I think we're in the middle of a banking crisis.
Well,
Do you?
certainly we are. If I'm yes, we are. If but we're early in it. If I'm right about the global bust, my definition of a global bust is something that we almost saw in 2008-9, but didn't because they saved the system.
Right.
This one, they're gonna wait too long, and the system's gonna break further than it did in 2008-9. So I think we will see, particularly in overseas banks, some big failures. And
Yeah.
our regional banks are vulnerable. So, our big banks, we could see one or two go under, but they're better capitalized than they were back then. So they may not. Either way, the reality is either way. That's why I'm talking about 20 trillion in new money from the Fed. Either way, most of those banks will be bailed out, right? Just like they
Okay.
were in
But
2008-9.
is
So,
it
but
an
yeah,
avoid? Is it an avoid, David, even during the melt up scenario?
I'll,
Underperforming sector?
I'll put it this way. Um, and I can't get into the individual stocks. I'd like to because there's some that I could highlight, but I'll put it this way. I don't think they're going down now. I think they may not get back to their highs. Other ones you had semis up before. There are lots of other groups that are going to go on to major new highs. The regionals may not. The banks in general, I'm not sure. XLF could, but may not. But there are some. One I won't name is a retail broker,
Okay, I
that
know
got
what you're
hit very
talking.
hard.
Yeah. Yeah.
Um, I think you could see huge moves, and they don't even have to go to new highs. So I think there's plenty of upside in these, and they're not going to be absent in the
Okay.
melt up, but that doesn't mean they'll go to new highs. The things that'll probably have your clearest runs will be things that have no overhead. If you go, semis aren't very far from a new high. Once you clear
Right.
that once you clear that old high, there's nothing to stop it. And there's, so you're going to see, I think, NVIDIA have a lot more. I'm sorry, I shouldn't talk names, but
Okay.
you're going to see semis keep moving. You're going to see industrials, which aren't far off highs, have plenty of clear run. So whereas things are down still, like the financials, they got to
Yeah.
clear more resistance, and so they may or may not get to new highs, but that doesn't mean they won't go up.
Your view on oil, David? I know that we've a lot of technicians are calling what we had here a breakout, pulled back to support, and they're talking $95 or
Yeah,
so in oil.
kind of like what I said in the dollar. I think what you see at these. I think you're going to have a major reversal. What you
Okay.
see, here is what you see in these little breakouts. Is people take the ball and run with it and get caught in that momentum just before a break. So I'm still believing the next move is back down to the low to mid 60s. You probably fool around there, may bounce back up into the 70s before, in the bust, you run down into the 30s or lower.
Okay, so this is a rally if you're long oil shares or WTI that you look for to take some profits on this pop.
Yes.
Okay, and I wanted to ask you this because I think the China story is a big story. Because it used to be, Dave, that if we caught a cold, the rest of the world caught pneumonia. It seems like that's reversed, and that China has a cold that could be spreading to other shores. In fact, to me, you're talking global bust, that what the Fed has done has been more damaging to Europe and Asia than to the US. How do you see that?
Depending on what are you talking about, what the Fed has done in the last couple of years, or
Yeah,
in
the rates, being in a tightening regime has slowed down
yeah.
things much more in Europe, and China's trying all these efforts to try and get things going again. Would you avoid China during this melt-up phase?
I would. I mean, there's always a chance that they announce a policy and you get a very quick run. That may be part of the melt up. Who knows? But from a stepping back from a more fundamental standpoint, and ultimately what I think happens in the bust, if we're vulnerable because of our massive leverage, they're 5 times more vulnerable. I mean, their whole so-called miracle was built on a house of cards, and it's starting to come apart. So I'd be, let me put it this way. I can't make investment recommendations, but in China, I find it a very hard market to have any conviction on the upside because of the risks.
Okay. Here Apple's an example of China retaliating. It's kind of like what we did with Huawei, and I don't know. Looks like Apple's being revalued here. I wanted to talk about this, David, and it's something that a lot of people, only the fringe is covering, and it's the CBDC. Do you think about the CBDC? Because is it possible that this whole thing is being engineered so that people stop having trust in the banks as they continue to withdraw funds from the banks, so that and we get the dollar targets you're talking about during the bust, 80 and the Dixie during the bust, and that um, this is being engineered because to get people to accept the CBDC, it would have to be there's a lot of fear and panic and people looking for a fix. And the Fed says now's the time to make the transition.
Yeah, I know that narrative is out there. I have a hard time answering this one because I am a huge believer that what we're seeing and what we've been seeing for several years here, and particularly the pandemic, what I think was deliberate. And I think we are seeing, and I don't want to, I shouldn't be political, but I will because I think it's obvious now. Obama set the stage for a new world order agenda. And I think he's been running the show ever since. except for the Trump years, and Trump got in the way of that, and that's why he's under such pressure. But basically, I think the left is working, and people can believe us or not, but working with the communists to push the U.S. and the world into a new world order that I call code for communist takeover of the world. So that being said, and that may sound crazy to people, that I try to keep my investment.
The Great Reset. The Great
I try
Reset.
to keep my macro away from that, and everything I see in the Fed and much of what I see in the markets, it has nothing to do with that. I think it.
You don't think the Fed has anything to do with it? They're the ones that are taking over the Treasury's role, because the Treasury had purvey over our currency. And you would ask any Fed chairman, the dollar's weak, what do you think? And they would always push it over to Treasury. Oh, that's not our purview. So please ask
don't
Treasury
misunderstand
Secretary.
me. I'm not saying there can't be work afoot to get a CBDC in there. I'm sure there is, and that may be coming. I'm saying that what we're seeing economically, financially, market-wise, can be explained without that. So you can have parallel tracks going on. I'm not saying that that's not happening behind the scenes, but I'm saying what Powell's doing, I think, is easily just typical of the Fed, staying the party too long, not understanding leads and lags. It will ultimately lead us to the same place, and the CBC is probably CBDC is probably coming.
Didn't the Fed say, David, that as soon as something broke, they would stop? And if something did break, don't you think, for them to have to do a rescue of those regional banks?
But let's take the New World Order agenda, or whatever you want to take, and put it aside, and let's just look at this as we would in previous cycles. I can easily explain Powell by the fact that and Powell and his FOMC friends, by the very fact that they, and I was talking about this for years before we got to this cycle, that the ghost of the early 80s has haunted us ever since. That people said, we're never going back there again. That inflation breakout was so scary and did so much damage. We're never going back there. So that's why for years they reacted to a little bit of increase in inflation and said, we got to bring it back down. This time around, because of the pandemic, they obviously reacted way too late. And we got the breakout in inflation. But I can easily explain Powell's actions in the FOMC with that ghost of the early 80s is still haunting them. And and to some extent, rightfully so, they understand that if you don't get this back in the bottle, if you don't get the genie back in the bottle, you're never going to, or it's going to be a job that's going to be very hard to do. So, up till now, and I'm a critic of Powell and a critic of the Fed staying too long. That's part of my bust thesis.
Right.
However, just looking at it up to today, it's hard to be critical of them for staying as long as they have. I think in the end, we're going to find out they did stay too long. But to this point, the economy's been resilient.
They could claim victory. Inflation has come down.
Yeah.
Right.
So I think it's more a typical Fed that is, typical collegial group that lives in the present and doesn't understand leads and lags is why we're going to get the policy error that I think we're going to get, which I call the biggest policy error in history, leading to a global bust. But you wouldn't know that at this point.
What will they do this month, David?
Probably pause this month. I mean, that's certainly what the market's expecting. And I think there is clearly signs of consumer slowdown out there. And, the jobs picture is mixed, even though people want to, glob onto every weekly number. There are signs the job situation is beginning to turn over just ever so slightly. I think they'll pause in September. I know the street has it built in higher probability for a hike again in November. If I continue to say we're trending down in the economy, we're trending down in inflation, I I don't try to predict month by month policy, but I lean towards thinking November is going to, that we may have seen the end of tightening temporarily for now. As I say, if we get my scenario of 6 to 7,000 on the S&P, and let's say it's by the end of the year, Powell's going to come back and tighten. I mean, I don't care as long as the economy is not tanking.
As long as the market isn't tanking.
No, my point is, if the market's up there, the economy can't be tanking, right?
Right.
You're not good. So as long as the economy's not tanking, and if we're up at 6 or 7,000, he still is driven by this idea, Dudley's idea, that the market has to go down. You're not tightening conditions, you're easing them. So we got to get it down. So I believe.
So the melt up exacerbates the bust because it gives Powell room to continue to stay higher for longer.
Precisely.
David, what a great interview once again. I would just like to leave it with, don't bank on the banks, and bank on following David, because he sees things and has taken the heat, and it's going to be very interesting to see your work and how it unfolds here going into year end, David. Always eye-opening to spend some time with you. Thanks for the conversation.
Yeah, thanks, Dale. Should be an interesting fall. Let's put it that way.
All right, my brother. David Hunter, everyone, follow him at Dave H. Contrarian on Twitter. And Dave is pretty responsive to people that have conversations about the market with him. I would say just be civil, or Dave's pretty good like me of just hitting that block button. So go ahead, buddy.
As I like to say, I'm a contrarian, so I expect people to disagree with me. That's fine. Yeah. It's when they start trolling that I say, hey, I don't need you on my feed, so see you later.
Well, it is a good seasonal period to block because football's back.
Yes.
All right. So I love college football. So I mean,
yeah, me too.
I'm in heaven. So Dave, great talking to you again. Good hunting. David Hunter, the Hunter, and appreciate having a call with you today, Dave. Thanks for making time.
Okay, thanks, Dale. Great to see you.
All right, that's a wrap, everyone. Follow Dave at Dave H. Contrarian on